We are very confident. We have run the numbers. We've done our scenario analysis. We have a number of cushions that we can fall back on. For example, we talked about the income disclosure scheme.
All right, so the ball is exactly lobbed in the governor's court. But considering that they've delivered so much in terms of market borrowing program, being substantially lower than what the market expected, it's over a rupee rally in some of the bonds, 10 basis point lower in several of the bonds. I guess the governor cannot complain at all. Market's still in the green, and we get all our market masters to give you their comments. Vetri Subramaniam joins us first from Religare AMC. Vetri, good afternoon. Thanks a lot for joining. Well, do you think that this budget deserves more than 5 out of 10 simply because it's delivered on fiscal prudence?
Well, without getting into trying to put an actual number in terms of rating the budget, I think the two clear positives that we can see: one, that we were looking for a commitment to the fiscal target, which is clearly there, and I think the other factor which perhaps has the equity market a little bit happy was that in the run-up to this budget, the biggest concern was any change in the long-term capital gains taxation regime, and the fact that that has been left unchanged has, I think, left most people quite happy.
Vetri, hi, good afternoon. So, did you get a sense that the underperformance that Indian market had seen all through this month, part of which was on fears of these taxes in budget, that should correct itself even if we have a fall in global markets? Can we see some kind of rally in our market?
That's a little harder to say, Anuj. I think the challenge remains that Indian earnings remain extremely weak. The quarter that went by for December, Nifty companies' profits were down almost about 8-9%. So we are still in a very difficult environment as far as earnings growth is concerned for Indian companies. And at this point of time, valuations continue to remain at a 3-4% premium to the long-term average. So from that point of view, I still think the Indian market is battling headwinds, and those headwinds are primarily related to the fact that our earnings outcomes remain very weak right now.
Okay, Vetri, what would you do with the banks? Do you find the market more clement for banks? Are public sector banks looking like worthy of a look-in simply because now you have Vinod Rai, so at least a part of the governance issue looks better? As well, there's a little bit of recap money and some more promised.
I think the recap money that has been promised is pretty much in line with the 70,000 crores that was announced last year as part of Indradhanush. So actually they're just sticking to the roadmap that was announced last year, nothing incremental, but there is a promise that as and when required they will step up further. I think there will be a need for them to step up further, but honestly expecting them to give you a whole roadmap for how they will resolve the issues of lack of capitalization for these PSU banks in one budget was just, I think, asking for too much. I think that will have to be a completely whole new policy in terms of what's the roadmap for PSU banks, not just in terms of providing them capital, but also further in terms of how we free them up completely from government control. And the Bank Board's Bureau is just, I think, one minor step in that entire process. So I didn't really expect the issue related to PSU banks to get complete clarity in this budget, so I'm not disappointed. But I think at some point down the road, we will require a lot more thought on this. It's not just a question of, instead of 75,000, maybe if they had said 1 lakh, it would have been better. It's not about the numbers. It's about how do we prevent ourselves from getting back into the same situation 5 years or 10 years down the road. We've seen it in the electricity sector. We tried the APDRP many years ago. Then we had the FRP, and now we have Uday. So every few years you come back to the same starting point. And therefore, when we think about the banks going ahead, we need to think about how we don't get back to the same place again, and not just about how much more money do we need to give them.
Okay, by the way, pull out the intraday chart of ONGC, and that's quite interesting because that's now trading at low point of the day, and while the market has seen a big recovery, ONGC is now down almost 9%. But you stay on with us. Mr. Tulsian, what do you make of this 9% slide in ONGC?
Anuj, unable to understand the reason of the fall, because if you see, the duty has been changed from 4,500 to 20% ad valorem. Because if you take 4,500, it works out to it worked out to about $9 per barrel. And now if you take the 20% on the present price, because earlier, if I say that earlier it was 600 rupees per barrel, per ton, per barrel, and now it has been changed to $20. So if you have $30 as the realization for the ONGC, the effective excise duty works out to them at $6 against $8.8 to be precise earlier. So as long as crude remains at $45 per barrel, I don't think that ONGC will be a loser. I am unable to understand unless until there are any additional, or maybe the duty, fixed duty also has been kept constant at some level, which I said in the morning that I am expecting it to be at some maybe 2,500 plus ad valorem of some kind of things. But I am unable to understand the logic of ONGC correcting because of this.
Okay, there was one more thing I wanted to ask Vetri when we were talking about banks and infrastructure. These steps to resolve the private-public partnership projects, disputes resolution bill, guidelines for renegotiation, stuck projects are getting attacked in a few ways. Is all these adding up to something? Is the general growth picture getting more disentangled?
Unfortunately, Lata, I think it's been slow progress on that front. If I remember right, the talk about this new 3P company was there in the 2014 budget soon after the government was elected, and we still haven't seen much headway on that. We haven't seen much headway on the Bimal Jalan Expenditure Reform Commission. We haven't seen anything on the Shanta Kumar Committee, I think, on food. So, it's one thing to talk about all of these measures, but I think in some areas, unfortunately, execution, which really I think most of us saw as the strength of this government, has unfortunately been a bit slower than what one might have hoped for. At the same time, there are some bright areas. I think if you look at what's happening in the road sector, certainly over there the government has managed to push the envelope along quite well, but overall I think some of these are still more talk rather than necessarily action.
Actually, that's what I was coming to. Anything you will buy, anything you're positively disposed to after looking at the budget?
No, Lata, my thought process on this has not changed for many years. We've never used the budget as necessarily the foundation based on which we take our buying or selling decisions. So as of now, I don't really have anything based on this budget that I really think I need to do.
Okay, so Vetri, would you say that it would be fair to assume that we will continue to see FII outflows, underperformance of our markets till earnings pick up? That really is the trigger that has to happen for the market to move up from here?
Again, I have no way of forecasting what foreigners will do. Foreigners have been investing in India for a long period of time. In that context, the outflows this year are still a drop in the ocean. But yes, I think eventually the point that you made is true, and that is that markets are slave to earnings. You cannot expect equity markets to perform when there are no earnings growth to be had. So I think that remains the big challenge for the market, and I think that's what eventually will determine your long-term outcomes. I do think we are at the very early stages of a recovery, but the market, perhaps after having run up ahead of its time a year ago, is now in the mood of show me the money, and so it may wait to first see the earnings before starting to do anything.
When you said recovery, did you mean economy or markets, Vetri? And basically for the markets, do you think there is a decent amount of downside to go?
I think as far as the economy is concerned, there are certainly a few bright spots, and if you see the RBI commentary, I think they've very clearly said that there are some bright spots, and at the same time there are areas of pain. So I think it's just going to be a time-consuming process for us to get through this, but it's a process we've seen before. I think one just has to be patient and be willing to accept some degree of P&L related pain in the companies that we own, as long as we think that the balance sheets are strong enough to get us through these difficult times and eventually benefit from that earnings recovery as and when it happens.
No, you're not telling me whether you expect a seminal fall in markets. I mean, see, the domestic funds have been the sheet anchor for the market for the past year. As a fund manager, are you seeing that also getting disturbed in any fashion? Now, LTCG, at least worry is not there. Do you think that sheet anchor remains not too much of a downside from here on? Probably 6,800, and then we are more or less there in terms of a troughing?
Just 2 points, Rata. I mean, first of all, I don't think it's worthwhile getting caught up too much in who's buying or who's selling in order to be determining what the right value for markets is, so I'm not caught up. The good news is that domestic money through the SIP continues to come in. But as far as markets are concerned, again, we don't look at levels, we prefer to look at valuations. The fact remains, Lata, that even after the recent sell-off in the Indian markets, as I said, on a trailing basis, it's still trading about 4-5% at a premium to its long-term average. If you're a long-term investor, this is still a reasonable point to get into the equity markets. But is it really cheap? The answer is it's not. If you go back to middle of 2013, at the peak of the taper tantrum crisis, India was trading at a 10-12% discount to its long-term average. Today we are still at a 3% premium. So we're actually doing pretty well in valuation terms.
Okay, right. Vetri, the other sector that's struggling today is autos, led by Maruti, of course. That's down 4%. But even others like Hero MotoCorp, Bajaj, we've seen quite a bit of decline in some of these sectors or some of these stocks. Are you tempted to buy some of these stocks right now in your fund, or would you give them a pass for now?
We've been positive on many sector stocks simply because we still think the Indian consumer is in reasonably good financial shape to be able to continue buying these demands, and these are aspirational goods for which we see demand growing over the next few years. But specifically related to today's fall, I mean, nothing in particular related to that.
Okay. All right, Vetri, pleasure speaking with you. Thank you very much for joining us with your first thoughts on the budget. Vetri has always maintained that that's not the way he takes decisions. I guess many people don't. But let's get to people who will help us pick some stocks. Prakash, well, at the end of this rather short story